Hey everyone, and welcome to This Explainer. Today, we're diving into the incredibly fascinating world of enterprise resource planning, or ERP systems. If you've ever found yourself wondering how massive global companies keep track of literally everything they do without just completely falling apart at the seams, well, you're in exactly the right place. We're going to discover how these systems take absolute chaotic guesswork and transform it into streamlined, automated precision.
So let's kick things off with a pretty crucial question. Imagine you're running a massive mining operation. You're tracking millions of dollars in spare parts, heavy machinery, daily supplies, the whole shebang. Why is relying on simple spreadsheets or basic accounting software just a total recipe for disaster? Think about it for a second. You've got the warehouse team using Excel, the purchasing team writing things down in Word, and finance, they're using a completely separate software tool. It's a mess.
The answer to all that chaos? Integration. You see, traditional siloed systems create endless data duplication. The exact same product might exist in 3 completely different systems, and get this, with 3 different prices. You have zero real-time visibility. The accounting department literally has no clue what's actually sitting on the warehouse shelves. It requires painful manual reconciliation and leaves you with absolutely no audit trail. But an ERP system completely solves this. It gives you one single database and one single, integrated version of the truth across the entire company.
Okay, here's our roadmap for today's explainer. 1. The ERP solution. 2. Sales and purchasing. 3. Managing inventory. 4. Manufacturing and maintenance. 5. Automatic accounting. And finally, 6. The integrated enterprise.
All right, let's jump right into Section 1, the ERP solution beyond simple accounting.
Unlike basic accounting tools that only care about the money, an ERP is an absolute powerhouse. It integrates finance directly with your daily operations, your HR, your inventory, everything. When you're dealing with incredibly complex environments, like mining for example, you have to coordinate massive equipment schedules, connect with international suppliers, and consolidate financial reports across global sites. An ERP handles all of that, while ensuring super strict compliance. In the industry, SAP is usually the dominant player for the giants out there, while highly modular systems like Odoo are growing really quickly for mid-size operations.
Moving right along to Section 2, Sales and Purchasing Workflows, the flow of business.
Let's look at the standard 6-step sales workflow. It's actually remarkably logical. A potential lead expresses some interest and you send them a quotation. When they agree, boom, that becomes a sales order. The warehouse is then automatically prompted to create a delivery order to actually ship those goods. Once shipped, an invoice is generated, and finally, the payment is recorded. The real beauty here is that the data flows seamlessly from Step 1 all the way to Step 6, without a single person ever having to manually re-enter the customer's info.
And you know, it's the exact same story when we're the ones buying things. The system just effortlessly guides us. It starts with a request for quotation, where we ask suppliers for their best price. Once you pick a vendor, it becomes a firm purchase order. Then, the warehouse logs the physical receipt of the goods, the supplier sends over a vendor bill, and finally, you issue the payment. Once again, it's just one continuous, unbroken chain of data.
Now, if you take one thing away from this section, it should be the massive difference between a quotation and a sales order. A quotation is really just a proposal. It's pending. It literally has zero impact on your finances or your warehouse. But a sales order, that is a rock-solid commitment. The very second a sales order is confirmed, the ERP basically wakes up. It immediately reserves your stock, it assigns a task to the delivery team, and it gets the invoice completely ready. It shifts from pending to real in an instant.
Which brings us to Section 3, Managing Inventory, Knowing What You Have.
If you want to stop expensive items from mysteriously walking out the door, you absolutely need a system of strict accountability. The ERP relies on what are called stock moves. What this means is inventory levels only ever decrease when goods physically leave the building, like when a delivery order is actually validated by a worker in the warehouse. Every single movement from a source location to a destination location generates a permanent, totally traceable record. No more guessing games.
But of course, not all inventory is treated equally. For highly specialized or massively expensive items, think of custom mill liners used in a processing plant, the ERP uses make-to-order routing rules. This is a brilliant feature because it ensures you only spend your cash procuring materials or manufacturing an item when a customer is actually committed to buying it. For standard everyday items, the system just uses standard reordering rules, and it'll just automatically buy more when stock gets a little low.
All right, time for some heavy lifting. Section 4, Manufacturing and Maintenance.
Keeping operations running.
So in heavy industries, keeping a multi-million-dollar haul truck operational isn't just nice to have, it's absolutely essential. A breakdown doesn't just cost you the price of the spare parts, it stops your production entirely. The ERP's maintenance module acts as the digital wrench that keeps all those gears turning smoothly, meticulously scheduling checkups way before things actually break.
It's really fascinating how the system separates these two strategies. Preventative maintenance is proactive. Think your scheduled oil changes and routine inspections. It is vastly cheaper because it avoids a catastrophic failure. Corrective maintenance, on the other hand, is reactive. It's fixing something after it already snapped. By using an ERP to rigorously track and schedule preventative maintenance, businesses can drastically cut down on those incredibly expensive, unplanned production stoppages.
And when things do need to be manufactured, mixed, or built from scratch, the ERP relies on a bill of materials, or a BOM. Think of it like a highly precise recipe. If a processing plant needs to produce a ton of a specific flotation reagent, the BOM specifies exactly how many kilograms of chemical A, chemical B, and water are required. This strict recipe ensures that every single time you produce something, the quality is perfectly consistent and the cost is calculated right down to the penny.
Let's shift gears to Section 5, Automatic Accounting, the Invisible Ledger. Honestly, this might be my favorite part.
The days of manually doing the books, they're completely over. You don't need a physical ledger and a calculator anymore. When a warehouse worker hits validate on a delivery, or when a purchasing manager receives a new shipment, the ERP is silently and automatically writing all those complex financial journal entries right in the background. The business transaction itself is what creates the accounting entry. It's almost like magic.
Because the system operates on a highly structured chart of accounts, it rigorously applies standard accounting principles. It perfectly tracks all your assets, liabilities, equity, revenue, and expenses. But most importantly, it strictly enforces double-entry bookkeeping. It is a fundamental, unbreakable law of the system that total debits must always equal total credits. Because the software is handling all this math automatically, your balance sheets and cash flow statements are always perfectly balanced and completely up to the minute. Let's bring all these puzzle pieces together in our final section, Section 6, the Integrated Enterprise.
Let's walk through a real-world scenario together so you can see where this system truly shines. Imagine the maintenance department requests 100 tires for the fleet. Instantly, the ERP checks the warehouse and sees only 20 are available. Now, without a human ever having to draft an email, the system automatically tells procurement they need to buy 80 more. Procurement creates the purchase order. When those 80 tires arrive, the warehouse receives them, and the ERP instantly pings maintenance to say their 100 tires are ready to go. And meanwhile, accounting automatically accrued the liability when the PO was confirmed, and they log the expense the exact moment the vendor gets paid.
The absolute game changer here is that this entire chain of events happens with literally zero redundant manual data entry. You have 100% traceability, there are no lost paper requests blowing around the warehouse floor, there are absolutely no blind spots for the finance team. The system even performs seamless three-way matching, meaning it ensures the purchase order, the physical receipt of goods, and the supplier's invoice all match up perfectly before a single cent leaves your bank account.
Having an ERP is honestly like having a high-def security camera recording the perfect sequence of your business operations. Everything is linked together. If an accountant sees an expense, they can literally click on it and trace it all the way back to the specific mechanic who requested the part 3 months ago. It empowers your team to actually focus on their vital work rather than wasting hours chasing down data discrepancies and matching up endless spreadsheets.
So, knowing how seamlessly an ERP connects the dusty warehouse floor directly to the CFO's boardroom, the only real question left is this. Are you ready to eliminate those chaotic data silos and step into the power of a truly integrated enterprise? Thanks so much for joining me for this explainer. I really hope it brought some real clarity to the incredible digital machinery that's running today's modern